Good day. Today I will discuss to you about accounting for liabilities part 1. Okay, part 1 lang po muna kasi yung part 2 we will tackle it probably after this week. Okay? So, what would be the content of our accounting for liabilities part 1? Our topic outline will focus on the following. Una, the definition and classification of liabilities. Pangalawa, measurement of liabilities. Pangatlo, presentation of liabilities. Pang-apat, we have the contingent liabilities. At the same time, we will discuss provisions, particularly the warranty and premiums, and then we will have a short summary, okay, on the discussions na ginawa ko. Hopefully, maintindihan nyo naman po ako sa mga discussion ko. Okay? So, so 5 lang po ang content. Kahit 5 lang po to, I have 30 slides. Okay? For this particular PowerPoint presentation. Okay? Sige. Una, let's define what liability is or liabilities. Liabilities are present obligations, present, okay, of an entity arising from past transaction or events, then the settlement of which is expected to result in outflow of resources from the entity. Okay? Kung titignan nyo, I underlined the words present obligations and then arising from past transaction or events, and there is an expected outflow of resources. Ibig sabihin po nun, once we say liabilities, it is an obligation today. Ibig sabihin, meron po tayong obligasyon ngayon. Okay? Obligasyon. Saan? At niyang obligasyon na yan, okay, nanggaling po yan from a past transaction. Ano po yung past transaction? Nangyari before. Hindi ka po magkakaroon ng obligasyon today kung walang nangyari before. Okay? Mahirap naman. Nagkautang ka yan na. Nagkautang ka ngayon. Pero wala pa lang nangyari kahapon. Diba? Sasabihin mo lang, babayaran kita. And then, magtatanong yung babayaran mo, bakit? Anong nangyari? Wala lang, trip ko lang. It's not a liability. Because, well, you obligated yourself to pay, but then there is no past transaction that happened. And then, hindi lang dapat ganon, no? There must be an outflow of resources, whether it's in kind or in a form of cash. Okay? So, once you are going to settle that obligation that came from a past transaction, you are expected to to um disburse, okay, a particular resources coming from your pocket, from the entity, whether it is in a form of cash or in a form of other assets. Okay? That is liability. Okay? Classification of liabilities. Liabilities, same with assets, can be classified into two. We have the current liabilities and the non-current liabilities. When we can say that a liability is a current liability, we have 4 considerations, in order for us to determine that this particular liability that we have today is a current liability. Una, if we expect that liability to be settled within the operating cycle. Okay? No, within the operating cycle. Sir, what if the operating cycle happened to be 3 years? If that is the normal operating cycle, be it. Wala po tayong magagawa doon. Because in real estate industries, in the ordinary course of business, usually the normal operation happened to be more than 3 years. The normal operation. Okay? If it can be settled on that in its normal operating cycle, it is considered as a current liability. Okay? Wala naman po sinabi that the operating cycle is within 12 months. Okay? Letter B, holds the liability primarily for the purpose of trading. Okay? If that liability, the purpose of having that liability is for trading, ibig sabihin, buying and selling of what? Of goods. Because if you are a merchandising type of business, then you buy goods on account, that is a trading liability. How about your manufacturing? If you buy raw materials, okay, on account or in a form of a promissory note, as long as it is related to trading, it is a current liability. And then, there's another. Due to be settled within 12 months after the reporting date. Okay? Sometimes, ito kasi, minsan, ito na lang po basis natin, even in actual, no? Yung basis naman nila is yung settlement within 12 months. Ito lang kasi minsan na iisip ng mga estudyante, yung 12 months. As long as it can be settled within 12 months, it is a current liability. Okay? After the reporting period. Well, ordinarily, the operating cycle, no, is 12 months lang naman. Kaya, pero pag sinabing that is 3 years na operating cycle, wala po tayong magagawa doon. Ano pa rin po ang nangingibabaw in financial reporting? Ito, ginagawa naman to. Well, in my practice, kahit alam kong 3 years ang operating cycle ng mga real estate, ordinarily, sometimes more than a year nga, no? Yung ginagawa, yung propose that liability that can be settled within 12 months is a current liability. Beyond that is a non-current liability. Okay? Letter D. Does not have an unconditional right to defer settlement. Wala pong unconditional right to defer settlement. Ibig sabihin, you who has the obligation, you don't have the right, no? Okay? To put an unconditional right to defer, no? The settlement na ipapagliban, yung pagbayad, you don't have that. Okay? If those four considerations are not in that particular liability, we can easily say that this liability is a non-current liability. Kaya nga sinasabi ko sa material ko that non-current liabilities are any liabilities that may not qualify as current liabilities. Yung apat na nandun sa taas, those are the qualification of a current liability. If that liability will not qualify on those considerations, okay, presumption, that is a non-current liability. Ganun lang po yung kasimple. Okay? Measurement of liabilities. Ito importante po to, no? Financial liabilities, if that financial liabilities are not at fair value through profit or loss, take note, ha? Financial liabilities not at fair value through profit or loss. Kasi meron po tayong mga financial liabilities at fair value through profit or loss. If the financial liabilities is not at fair value through profit or loss, it shall be measured at fair value minus any transaction cost that are directly attributable to the issuance of the financial liability. And subsequently, it is measured at amortized cost. Okay? Initial measurement, if that financial liability is not at fair value through profit or loss, it must be initially measured at fair value minus transaction cost, and subsequently measured at amortized cost. Okay? I have a short note here that for current liabilities, okay, the fair value is the face value. You know, the fair value is the face value pag current liability. For non-current liabilities na not at fair value through profit or loss, the fair value is the present value. Okay? Okay? Yun yung mga notations ko dyan. Okay? Usually. Okay? Next. Presentation of liabilities. Liabilities can be presented into different line items, pero separated pa rin to current and non-current liabilities. We have these are the usual line items in the presentation of liabilities. We have what we call the trade and other payables. We have the current provisions, the short-term borrowings, the current portion of long-term debt. We have the current tax liabilities, and most common on non-current liabilities are bonds payable and long-term liabilities. Ano po ba yung trade and other payables? Trade and other payables, these are obligations to pay for goods and services that had been acquired in the ordinary course of business. In this line item, it usually includes accounts and notes payable, trading, trading accounts and notes payable, payment due to suppliers, payment due to employees, and other similar accounts. Okay? Kaya nga trade and other payables, no? Any trading payables and other payables in the operation, such as payment due to suppliers, payment due to employees, payment due to um, um, officers, advances from customers, are trade and other are can be included on the line item trade and other payables. Ano naman po yung current provisions? Current provisions, these are obligations that meet the qualification provided by International Accounting Standard number 37, which we're going to discuss later on. Kaya nga, yung mga current provisions, ito yung mga warranties and premiums. Okay? Na i-discuss ko po later on. Short-term borrowings, these are loans. Okay? Short-term loans to any financial institutions and intermediaries which periods uh, which which have a short-term period. Yung current portion of long-term debt, ito naman yung a long-term liability wherein a portion of that liability is payable already within 12 months. So, ibig sabihin, kahit long-term debt yan, or long-term notes payable, if a portion of that long-term payable is payable already or can be settled within 12 months, that portion shall be presented as part of the current liability, then the remainder, is presented as part of the non-current liability. Current tax liabilities naman, ito yung mga tax payable natin that is due on the following period. For example, income tax liability. For bonds, okay, well, i-discuss ko naman po yan on the next chapter of this subject. So, long-term liabilities, yung mga loans na mas mahaba-haba yung period, long-term period na pagbabayad. Okay? So, illustrative example for presentation. For example, on December 31 of the current year, ABC Company requires you to compute the total amount of current liabilities to be disclosed in the Statement of Financial Position and further provides the following information. Ibig sabihin po, we are required to compute the total amount of current liabilities given the information below. Accounts payable, including deposits and advances from customers of 250,000. Okay, 1,250,000. Notes payable, including note payable to bank due on December 31 of the succeeding year, 1 million. Stock dividends payable, 400,000. Credit balances in customers' accounts, 200,000. Serial bonds payable in semi-annual installment of 500,000. We have 5 million. Then the accrued interest on bonds payable, 150. Contested BIR tax assessment, possible obligation, 300. Income tax expense payable on April 15 of the succeeding year, 165,500. And then we have an unearned rent income of 100,000. So kung titignan ko po yung provided information, I can say that hindi ko po yata isasama si contested BIR tax assessment na possible obligation. Una, because this obligation did not qualify to the definition of liability. Remember, a liability is a present obligation. Yung iba tawag nga, that is a probable obligation. Because this is a possible obligation, well, this is a liability but not subject to disclosure in the face of the financial statements, particularly on statement of financial position. Okay? So, if that would be the case, hindi ko po siya isasama sa computation ko. Hindi ko rin po isasama sa pag-determine or hindi ko po siya consider na liability yung stock dividends payable. Bakit? Even though it's a payable, the stock dividends payable is not will not qualify to the definition of liability. Bakit? Remember, stocks, dividends payable, these are stocks being paid to the shareholders. Okay? Shareholders are agents of the corporation. No? Even though it's a settlement, but take note that stocks came from the retained earnings account, diba? Came from the retained earnings account, which owned by the company itself. Once it is extinguished, binabayaran na po, yung retained earnings bababawasan, pero mawawala ang stock dividends payable, papalitan lang po yan ng share ng equity account. If we are going to deeply analyze the transaction, wala pong outflow of resources. Kasi take note, no? We debit retained earnings, we credit stock dividends payable. Upon payment, we debit stock dividends payable, then we credit ordinary shares or preference shares capital. Lalabas, we just reclassify the retained earnings into an equity account. Wala pong actual resources na nag-outflow from the entity. It retains to the entity. So, it will not qualify as a liability. Kaya, hindi ko po yun isasama as a liability. So, ngayon, yung pagpipilian ko na lang as part of current liabilities is the accounts payable, the notes payable, the credit balances in customers' account, okay, the serial bonds payable in semi-annual installment, the income tax expense payable on the succeeding year, and the unearned rent income. Okay, sa tingin ko, parang yung credit balance in customers' account, you are doubting, no? Sir, credit balance in customers' account. Ibig sabihin po ng customers' account, the accounts receivable. So, ibig sabihin po nun, the accounts receivable happen to have a credit balance. Di ba, sir, asset yon? Bakit po i-consider ko po siya as a liability? Today, knowing that naging credit balance, dapat asset yon. kasi AR nga yun. Take note, kasi sobra po tayong naningil, meron po tayong obligasyon ibalik ang sobra nating siningil. So that's, in essence, it's a liability already. Kaya, I will include that as part of the liability. Okay? So, to solve that, this will be my first solution. For the trade and other payables line item, it will have accounts payable of 1 million. Bakit hindi na po, sir, 1,250,000? Yung 1,250,000, yung 250 nun, ni-reclassify ko lang into a different account, which is advances from customers of 250,000. Then, we have the credit balance in customers account of 400, and then unearned rent income of 100. So the total trade and other payables, it was 1,750,000. Okay. So there is a note there. Now, note 1, we record separately the advances from customers considering that it does not have seminal nature of accounts payable. Yon. That is the reason why I reclassify the 250. Ibig sabihin, pinaghiwalay ko lang sila kasi the advances from customers has a different nature to the accounts payable account. No, bawal naman po yun na pag-isahin mo yung advances at accounts payable considering that it has a different nature. Note 2, if an accounts receivable from a particular customer disclose a credit balance, such shall be considered as a liability. Yun na po sinasabi. Primarily because the entity has the obligation to return the excessive collection from a customer. Offsetting the credit balance from other customers of account having debit balance is generally prohibited as per IAS 1. Okay? Baka naisip nyo, sir, kasi AR naman yan, no? Ng isang customer, i-offset ko na lang siya sa iba. Hindi po yung pwede. Offsetting generally is prohibited by IAS. Unless otherwise, the standard clearly provides that offsetting is acceptable. In this case, advances, the credit balance of this customer cannot be offsetted to other customers' debit balances of AR. Okay? Next, short-term borrowings, no? Notes payable 1 million. Okay? And then serial bonds payable 1 million lang. Okay? Bakit? Note 3. We will exclude the 500 as part of the current we will exclude, hindi include, exclude, tatanggalin the 500 as part of the current liability due to it is not demandable within 12 months. Yung 1 million, from the 1,500,000 na notes payable is already demandable within 12 months. So, it will qualify as current liability. Yung 500,000, pwede po siyang mailagay na lang as part of non-current liability. For serial bonds, remember serial bonds are bonds payable that are paid in installment or in a series of period. Okay? The amount of 1 million refers the two installment of bonds kasi semi-annual naman po yun. So, 500 sa first 6 months, 500 sa second months, naging 1 million. And in that case, demandable na po siya within 12 months. So, it will qualify already as part of the current liabilities. So, the total short-term borrowings will be 2 million pesos. Okay, for current liabilities, the trade and other payables will be 1,750,000. The short-term borrowings, 2 million. Yung accrued expenses, this is referring to the accrued interest payable that is demandable already within 12 months, 150. Then the current tax liability, this refers to the income tax liability that is payable on the succeeding year. So the total current liabilities is 4,065,500. Okay? So yon. Yung non-current liabilities, 4,500,000. Okay? Yung hindi ko po na isa, yung iba na hindi ko isinama, wala po dyan sa liability section. The possibility na ilagay ko po yun sa shareholders equity, particularly the stock dividends payable, kasi it must be presented naman talaga sa equity section. Yung possible obligation ng BIR assessment, it will not be disclosed in the face of the statement of financial position kasi that is a possible obligation. Yung kailangan lang pong gawin pag possible obligation is a disclosure to notes to FS. Ibig sabihin, ikwekwento mo lang sa notes to FS that there is a possible obligation. But as to the amount, as to the line item, hindi po yun maidi-disclose in front of the statement of financial position. Yung possible obligation. So hopefully na-clear out ko po yung sinasabi ko pong possible obligation. Okay? Next. Provisions and contingent liability. Provisions are liability of uncertain timing or amount. Ibig sabihin provisions, you have the word uncertainty. Walang kasiguraduhan kung kailan at kung magkano. That is a provision. A contingent liability is a possible obligation. Ayun, that is a possible obligation. So kanina yung BIR tax assessment na illustrate sa problem yung kanina is a contingent liability. According to standard, contingent liability is a possible obligation depending on whether some uncertain future event occurs or arises from past whose occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. Okay? Basta possible obligation yan, that is a contingent liability. Or, meron pa other definition of a contingent liability. A contingent liability can be a present obligation, but payment is not probable. If the payment is not probable, or the amount cannot be measured reliably, even though it's a present obligation, that is a contingent liability. And take note, a contingent liability is not subject for disclosure to the face of the financial position, statement of financial position. Instead, it shall be disclosed as part of notes to FS. Okay? Sige. Next, measurement of provisions. Kasi the contingent liability, hindi naman natin yun i-measure kasi usually, i-measure naman pero at estimate lang, pero subject for disclosure lang naman yun. Pero unlike the provision, no, kasi pwede po siyang ma-record, the amount or value of provision will be based on its best estimate. Okay, best estimate of the expenditure required to settle the present obligation at the balance sheet date. Whatever the best estimate at the balance sheet date, that would be our measurement of provision. Okay? What is warranty? And nandito na po tayo sa accounting of some provision na accounts. Okay? Warranty is a statutory obligation. Why statutory obligation? Because there is a particular statute or law saying that a seller is obligated, no, to provide warranty to its customers. Warranty is a repair to a particular item such as gadgets, televisions, computer sets, if those items may have internal defects. Kasi hindi naman po natin maiwasan that these items merong mga defects internally. Okay? So, those internal defects shall be repaired by the selling entity and then provide repairs. Okay? In a given period of time, no? So, the warranty has expiration. Okay? Generally. Pero, sa pagkakaalam ko sa batas wala, no? But, okay? Pero mahirap naman, i-warranty mo yan 10 taon. Diba? Okay? So, yon. That is warranty. Warranty because we have a statutory obligation, no? There is a possibility that we will incur expenses at the same time recognize liability because we have an obligation in the future and the past transaction already happened by selling that particular gadgets that may or may not have internal defects. Okay? And there is a settlement. So, there is a settlement, there's an outflow of resources. So, warranty is a liability. Tanong mo ngayon, how are we going to account warranties? Okay? There are two methods for accounting of warranty. The accrual approach and the expense as incurred approach. The accrual approach, warranty expense are immediately recorded if an estimated value of expense is already determined. While the expense as incurred approach, warranty expenses are recognized upon actual incurrence and later on adjusted at year-end. Ganun po yun. To easily understand and compare the two approaches, okay, I prepared an illustrative example related to warranty. Okay? XYZ company is selling 1,000 units of radio sets at 4,500 each for cash. Okay? And each radio set is subject for warranty of 1 year. The entity determined from the past experience that 75% of the customers avail the warranty. The repair cost for each radio set is $650. At the end of the year, the company incurred 365 warranty expenses. And at the beginning of the current year, the opening entry shows a credit of estimated warranty payable of 175. So, ibig sabihin itong 175,000 pesos na to is a beginning balance, no, of the current year. Well, later on we will use that, no, na lang to prove yata the ending balance of the warranty liability. Okay? Sige. Take note, we have 1,000 units of radio sets sold. Then we estimated that 75% will avail warranty. Then the cost of repairing the radio set is 650. And at year end, the company incurred 365 warranty expenses. Those items are important in preparing the journal entries for accounting for warranty. Okay. First journal entry that we are going to prepare. Well, to record the sales. Under accrual approach, very simple. We debit cash at 4,500,000, then we credit sales. Whether accrual approach or expenses as incurred approach, it will have the same entry. Madali lang naman mag-record ng sales. Kung hindi cash ang debit, pwede namang AR kung on account yung binili. Okay? That will be our first entry. I will not explain anymore, no, about the entry kasi this is very basic. The next journal entry will be related to the estimated warranty liability. To set up the estimated warranty liability, under accrual approach, we will prepare an entry for the estimated warranty liability. Paano po natin mako-compute yun? This will be the pro forma debit warranty. This will be the pro forma entry, warranty expense, then credit warranty payable. Okay? But how did we compute the 487,500? Very simple. Remember, the number of units sold is 1,000. And then we estimated that 75% of the 1,000 units sold will avail the warranty. So we are expecting that 750 units will be repaired. And then, take note, the cost of repair is 650. So 750 multiplied by 650, the warranty payable, no, estimated warranty payable is 487,500. So the warranty payable that we record and the warranty expense that we record are merely estimated in this case, in this entry. Is that acceptable? Yes, that is acceptable because remember, provisions are measured at its best estimate, and that is the best estimate that we have. Expenses incurred approach, no entry to be prepared. Okay? Hindi po tayo nagse-set up ng estimated warranty liability. Kasi, from the word itself, expenses incurred, they are going to prepare an entry only if the expense is incurred already. Okay? So, hopefully na nako-compare na po natin, ha? Pangatlo, our third journal entry is to record the payment of actual cost incurred. Take note, nagbayad po tayo ng 365. In accrual approach, the 365 payment must be recorded against the warranty payable. That would be debit, warranty payable of 365, then credit cash 365. Okay? Again, under accrual approach, if there is an actual payment of the warranty, the payment must be recorded against the liability account, which is the warranty payable under accrual. So, that's why with debit warranty, binawasan na po natin yung warranty. Kasi from the estimate, nagbayad na po tayo ng 365,000. Okay? How about expenses incurred? Because we already incur actual incurrence of expense, we simply debit warranty expense. Kasi expense as incurred nga, di ba? Debit warranty expense, 365. Then credit cash for 365,000. Okay? Journal entry number 4. At year end, under accrual approach, are we going to prepare an adjusting entry related to the transactions? None. No entry. Assuming that, no, we will not prepare an entry if there is no changes on the estimate. If there is changes on the estimate, adjust. If no adjustments on the estimates, okay, prepare an entry. If there is an adjustments on the estimate, well, just debit warranty expense, then credit warranty liability. If there's an additional estimate, if there is a decrease on the estimate, reverse the entry. We debit warranty liability, then we credit warranty expense. Kung expenses incurred approach ang gamit, no, we will adjust. Bakit po i-adjust po natin? Kasi there is a tendency that the warranty expense and the estimated warranty payable is understated. Kulang. Kasi binase lang po natin yung warranty expense based on the actual incurrence. Remember, provisions are measured at its estimate. Pag hindi po natin yun i-adjust, it will not qualify anymore to the definition and to the measurement of provision that says provisions are measured at its best estimate. Kaya we need to prepare an adjusting entry. Adjustment at year end in relation to the warranty payable. Sa warranty payable po tayo nag-a-adjust. Pag i-adjust ang liability, kapares niya adjustment ng warranty payable is a warranty expense. Diba? Okay. Basis. With the 122,500. Remember, the units sold is 1,000, then our estimate is 75%. So the product that we expect to be under will avail the warranty is 750, multiply 650, that is 487,500. So the estimated warranty payable is 487,500. And then we deduct the actual payment, actual incurred, no, na repair, the 365. So the additional warranty liability or expense is 122,500. So we add additional 122,500 for warranty expense, and we add warranty payable for 122,500. Okay? Sir, parang mas madali yung accrual approach kaysa sa expenses incurred. Oo, mas madali yung accrual approach kaysa sa expenses incurred approach. Pero whatever approach you use, we will come up with the same balance, ending balance. To prove that, ito yon. Whether expenses incurred approach or accrual approach is used, the ending balance will be the same. Look, the warranty payable beginning is 175, provided naman po yun sa problem. Nag-credit po tayo, so additional estimate of 487. Tama? 487,500. Nagbayad po tayo ng 365. The warranty payable ending will be 297,500. Kung expenses incurred approach ang ginamit mo, the beginning balance was 175. Then nagkaroon ka po ng year-end adjustment at the end of the period ng 122,500. Lalabas, the warranty payable is 297,500. So, it will have the same answer. But if you're going to ask me, no, which method are you going to use? I will prefer the accrual approach. Why? Because the liability account can provide me information how much was the additional estimates and how much from the warranty payable is already paid. Unlike the expenses incurred, hindi ko po makikita kung magkano na po ang nabayaran. Makikita ko lang po kung yung liability account ang pagtutuunan ko ng basis for analysis, no? I will prefer the accrual approach pa rin. Kasi the expenses incurred will not give me proof or information from the total liability, the estimated liability that I have, how much na yung nabayaran ko. Okay? Pero, in the actual board exam, whether accrual or expenses incurred, it will come up with the same answer. So, you don't need to worry about. Okay? Sige. Next, what is premiums? Premiums are items given to customers in exchange of coupons such as sachet, bottle caps, etc. And sometimes with certain amount of cash. Itong mga premiums na to, parang ito, mag-iipon ka ng 10 tansan and then from that 10 tansan, pwede mo na siyang ipagpalit ng isang pinggan. Yung pinggan, yun yung premium. Okay? Ganun lang po yun kasimple. Liability exists from the point that the items are being sold already. Not the premium. Itong items na tinutukoy, not the premium, but the products na pwedeng nilang ibenta. Okay? Sige. How are we going, what would be the accounting procedure for premium? Okay. Premium expense are recorded from the time, no? It is from the time it is sold, and it is estimated, from the time it is estimated and actual redemption was made. Ayun, no? To make it clear, premium expense are recorded from the time you estimate it and from the actual redemption was made. Okay? The cost of premium expense is equivalent. Ito importante, ito yung second. The cost of premium expense is equivalent to the cost of premium inventory. Yung premium inventory, yung ipamimigay, less cash remittance from redemption. Yung cash remittance kasi, there are premiums na sasabihin, mag-ipon ka ng 10 pakete ng shampoo, pwede mo siyang i-exchange into a glass, you know, babasagin na glass. Glass nga, di ba? Babasagin yon. Pero, para maka-exchange, you need to pay around 10 pesos. Okay? Pwede po yun, no? Oh. Ibig sabihin, the cost of premium expense is equivalent to the cost of premium inventory. Kung magkano yung glass, then ibabawas mo yung 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 10 piso na kasama sa pagkuha ng premium na yon. Okay? So, I will discuss it clearly in the illustrative example that I prepared. Illustrative example. An entity manufactures a certain product and sell it at 300 per unit. A soup bowl is offered to customers on the return of 5 wrappers plus a remittance of 10. Ibig sabihin, you will be given a soup bowl if you will return 5 wrappers, then additional 10 pesos. Okay. The bowl cost of 50 pesos. Okay, the bowl costs of 50 pesos. Importante ha, yung importante ko dito, the 5 wrappers plus a remittance of 5. The bowl cost of 50, and then we estimate that 60% of the wrappers will be redeemed. Importante yung estimate, yung 60%. Then the data for the first year concerning the premium plan are summarized below. We have 10,000 units. We have acquired 2,000 units of soup bowls at 50. Then, we actually redeemed 4,000. Importante po yung actual redeem na 4,000. Ibig sabihin, these are the wrappers that we actually redeem already. So, what would be our journal entries? Okay. First journal entry is to record the sale of certain product. Kasi nakabenta po naman tayo ng 3 million, that would be cash or accounts receivable if it was sold on account, debit, then credit sales for 3 million. At the point of sale, we can already determine that there is a liability. Kasi, from the time na ibenta mo yun, same with warranty ha, from the time na ibenta mo yun, it is expected and estimated that you will incur liability. Okay? Next. To record the acquisition of the premium inventory. Remember, 2,000 soup bowl and then at 50. So, we debit premium inventory, soup bowls of 100,000, cash or accounts payable at 100,000 pesos. Madali lang naman yung entry. Wala pa dyan yung liability ha. Okay, to record the redemption, meron nag-redeem. Paano ko po nagawa yung entry? Na cash 8,000, premium expense 32, premium inventory, soap bowl 40,000. Take note, no, that the number of soup bowls distributed will equal to the number of coupons that you redeem. We redeem 4,000 coupons. For every 5 coupons, we will release 1 soup bowl. So, if we have 4,000 coupons na na-redeem, i-divide po natin yan by 5, ibig sabihin, 800 po ang na-i-distribute natin. So, the premium inventory release at cost would be 800 soup bowls were already given, multiply at 50, it equals to 40,000. So, we credited premium inventory soup bowl 40,000 kasi binabawas na po natin sa asset account natin kasi nailabas na natin. Cash received from redemption. Remember, in every soup bowl na i-release natin, makakatanggap po tayo ng 10 piso. Tama? Okay, if there were 800 soup bowls and then in every soup bowl there is 10 pesos, 800 times 10, that would be 8,000. Okay, nawawala po yung zero. That is 8,000. So, we debit cash because we received cash of 8,000. And then, the premium expense, take note, sabi ko kanina, the value of the premium expense is the cost of the premium inventory less the cash cash remitted to you or cash received from redemption. So if there is 800 soup bowls released and the cost of bowl is 50 and you receive cash at 10, we need to multiply 800 by 40 pesos. Therefore, the premium expense related to the redemption of the 4,000 wrappers is 32,000 pesos. Sir, pag wala pong cash receipt, wala tayong ibabawas. Huwag mong ipilit kung wala, di ba? That is, ganun lang po kasimple yon. Journal entry number 4. How, at the year end, remember, yung 4,000 was actual. We need to adjust at year end because we have an estimate of 60%. Unless otherwise, the 4,000 is equivalent already to the estimate that we have. But take note, hindi pa yata yun yung equivalent ng 60%. Kasi if we have 10,000 sales and then 4,000 were redeemed, it's around 40%. So, the 4,000 redemption is not equivalent to the 60% na estimate natin. So, we need to adjust. Is that an adjustment to add or adjustment to deduct? Obviously, an adjustment to increase kasi nagwawala yung 20%. Well, this will be our pro forma entry to record year-end adjustment as to understatement of the premium expense and premium liability account. We debit premium expense at 16,000, premium liability at 16,000. The premium liability was based on the estimated percentage of the coupons that can be redeemed. Okay, to expound that, look, no, my computation of the 16,000. The actual units sold was 10,000 units. And then we estimated that 60% of the actual units will be redeemed. So we are expecting 6,000. So 6,000, i-divide mo yan sa number of coupons to redeem premium, which is 5, di ba? And every soup bowl, you need to have 5 coupons. So 6,000 divided by 5, we are expected to release a premium of 1,200. However, during the year, we actually distributed only 800. So 1,200 minus 800, we have 400 pesos. 400 we have still remaining 400 na dapat i-distribute. Okay? So, that would be our obligation pa. Okay? Ibig sabihin, the 800 is the 40%, the 400 is the 20% na nawawala. Okay? So, we need to recognize that as estimated premium liability. Tanong, at what value? Well, because premium expense is valued at cost minus any cash received from redemption, so we will multiply it by 40. So 400 multiplied by 40, we will say that we have 16,000 premium liability. So that's why, going back to the entry, the premium expense is at 16,000, then the credit premium liability is 16,000. Okay? So, yun po yung accounting on premium liability and then warranty liability. Okay? To summarize, no, ito lang naman po pinaka-importante sa lahat. Financial liabilities not at fair value through profit or loss are initially measured at fair value minus transaction cost that are directly attributable to issue of the financial liability and subsequently measured at amortized cost. Importante po yan. No? Second, liabilities are classified into current and non-current assets, and then estimated liabilities are recognized and subject for disclosure in the statement of financial position and its corresponding notes. The best estimate is the measurement of provisions, such as premium and warranty. Contingent liabilities are generally not presented in the statement of financial position but disclosed in the notes to financial statements. So, um, those will be my summary about my discussion about accounting for liabilities for part 1. If you have any inquiries, clarification, don't hesitate to ask me. No, um, you can um, put a comment or um, alam niyo naman, may Facebook account, we have a group chat, we have a Facebook page, we have the canvas. You can write anything you want for clarification, okay? And if you have additional idea to share, just write it to the clarification wall for this discussion. Hopefully, naintindihan niyo po ang discussion ko on accounting for liabilities, part 1, particularly on premium and warranty. Thank you and God bless everyone.